as the Trump victory came in, already markets had reacted, and victory at a scale which was not imagined. Does this mean more money globally coming into America, again at the cost of emerging markets like India?
It should not be, but unfortunately, we live in a world when there is some risk aversion, some uncertainty. Everybody flocks to US dollar assets, either the US dollar currency or the US dollar bond or US equities. And that's what we've seen. But combine it with the fact that the US economy is showing tremendous growth momentum on the back of spending boom with respect to AI, on the back of very strong corporate earnings and fairly resilient consumer balance sheet, the economy is looking very good. So late in the cycle, it should not be growing at 2.5%, 3%, but it is. So I don't think the US needs to give people too many reasons to invest. All the reasons are already in there. I don't think Trump coming or not coming would have made a difference. Flows would have been US friendly for a while. But now with the cloud of tariff gathering, it has an impact on people's view on the US dollar. If you have tariffs, the dollar will strengthen. All the other currencies, which are the exporting currencies in the US, they should sell off just to balance out against the tariff. So that makes it a no-brainer as far as a long dollar call is concerned. Now, if you also combine that with the fact that there is a strong likelihood that the US fiscal will not go toward consolidation, that means more bond issuance, but that also means high interest rates, which again brings global investors in. So in a way, US good news and bad news, both of them seem to be right for US assets at this juncture. It will not last. But at this moment, given the uncertainty, it's all long dollar, long USD assets, unquestioned.
So long dollar, long USD assets. And if I were to ask you to complete that equation with India in it?
Right. So I think that the secular growth story of India is absolutely undiminished. And when I talk to global portfolio managers, whether in India or outside of India, in the Middle East or Europe or the US, there's not one percent decline in people's enthusiasm or interest in India, whether it is related to India's sort of burgeoning supply chain of manufacturing, or the burgeoning and extremely full of vitality in the capital markets, whether it's M&A or private equity or listed equity market. There is a lot of interesting deals, interesting opportunities, and there's a lot of interest from global investors. I don't think anything, if that is being diminished. We're only talking about the last 3-4 months, during which time we have seen some degree of sideways movement, a few sell-off here and there. But otherwise, I really don't think, again, it's not a zero sum. Good news for the US should not be bad news for India at all.
When do you see this sort of tide turning as far as India is concerned, Taimur? I mean, you're one of the few voices who has been completely very bullish on India, even, I mean, in the recent past. And when I'm speaking to you right now, compared to others who are talking about overvaluations, who's talking about China and US being a negative for India, you're saying this is just a correction. India had a one-way run-up. When do you see that tide turning? You already have very hefty outflows.
Right, Tamanna. So I really feel that it's a matter of time frame. If you were to ask me, do you want to put in money in the Indian stock market with a 3-month horizon? Do you think there's substantial upside? I probably will hesitate. But that's not the time frame that I'm talking about. I mean, we should not be thinking about the stock market in such narrow tactical terms. Nobody can time those things, as we have seen with the FNO saga this year in India. We should think about the US stock market, Indian stock market, as a multi-year long game. And in that horizon, the market will deliver good returns, no question about it. There have been issues related to how strong is the export demand, and that is not India specific. We see all over the region, with the exception of the very latest data that came out of China yesterday, exports have been a bit on the downside lately, and Indian exporters have felt that. We've also felt that there's a bit of a two-track economy in India, rural demand versus urban demand. There's been a bit of a lopsided momentum. Those things have given people a bit of a wake-up call, and we've seen that among Indian retailers who have given some signals, and they've come to your show many, many times in recent years, that they also feel that the sort of strength and demand that should be a part of India's structural story probably is not there. But surely there is sometimes a bit of a cyclical element. There is sometimes some degree of exhaustion after a very strong bullish run, whether it is consumption or the stock prices. We're going through that. That doesn't bother me at all.
Okay, so so let me rephrase the question that you actually asked yourself. You said, if you ask me, will you invest in India right now with a 3-month time frame, I would hesitate. What is the time frame which removes all hesitation for you?
Oh, as soon as we go past 1 year, I am very, very comfortable.
But 1 year is a long time, Taimur. That's a long time. The 3 months is feeling like a lot longer for Indian investors who've seen their portfolios dwindle.
They're spoiled for choice. They're also seeing their portfolios expand tremendously in the last 3 4 years. They should take that into context.
Okay. So now, okay, we've talked about Trump briefly. We've talked about China. Let's talk about Fed and what we've heard from the Federal Reserve in the last 12 hours or so. 25 basis point cut in December. Now, how certain would you be? Also, how certain you'd be that Powell sticks around, even though he says that, no, Trump can't fire me?
Right. I think that was like the most interesting part of the entire press conference, not the commentary on the economy, because that was just, ho hum. We've heard the same story many, many times. Labor market marginally weak, underlying demand still pretty strong, inflation is coming down, the Fed is happy with cutting rates, and I think we can say fairly safely that the December rate cut is also on the cards. Nothing is going to happen as far as Trump's policies are concerned between now and December. He will not take office till January. I think 2025 is going to be very interesting. All this time, the Fed's playbook has been to prepare the markets for a sustained set of rate cuts through the course of 2025. And we've all been busy pricing in a terminal Fed rate of 3%, 200 basis points below where we are now, or 175 basis points below. That is looking increasingly untenable. And you've seen that already reflected in the pricing even before the election. I think the election sort of reinforces that view that bringing inflation down to 2%, bringing Fed funds rate down to 3% might be nearly impossible in 2025, especially if the US growth momentum remains unabated. If we're expecting tax cuts under Trump, if we're expecting all sorts of support for the capital markets and deregulation, how on earth are we going to see growth slow down and therefore services inflation in particular? I'm not that worried about goods inflation. That's a tariff story. We'll see that later. But just in terms of services inflation dynamic, which is the key source of inflation pressure in the US right now, that might turn around and spoil the picture in 2025. So I'm not fussed about the Fed direction in December of this year. They'll cut. How many cuts can they carry out in 2025? And if indeed Trump goes all out with deficit spending, unfunded tax cuts, should the rise in long end, which the Fed really cannot control, bother the Fed? Or should they just talk about near-term inflation outlook and keep on cutting rates? And we see an increasingly steep curve, which could create other problems in the market. So those are all beginning to now come into our windshield, if you will. We have to keep an eye on that. Storm's coming, but not in December.
Okay. So what happens in 2025? Do you see possibly an extension of rate cuts, a pause, or then a reversal in direction?
The baseline scenario, which is independent of what policy prescription that Trump will put in place, let's just talk about the baseline scenario, is one where growth does go from, say, 2.5 toward 2 in 2025. Why would that be the case? Because on the labor market side, we are beginning to see marginal, not substantial, and marginal weakness. And as wage growth moderates, there is some degree of softness in the labor market. It should bring growth down a little bit. That in turn should have a solitary impact on inflation and bring inflation down to 2. In that scenario, 2% inflation, 2% growth, that can take the Fed funds rate down to 3.5, at least in my view. Now, how would this view be challenged? If again, as I said earlier, Trump comes with a very expansionary fiscal agenda, the Fed will start thinking about the risk to inflation in the medium term. But mind you, this is a data-dependent Fed. They cannot make a decision or postpone a decision for some inflation that might appear in the horizon a year and a half from now, owing to tariffs or expansionary fiscal policy. They're forecasting models, which is based on available data on labor market, on capital formation, on economic momentum. That also needs to show that in the near term, there is significant inflation risk. I am not sure they'll be able to show that in a very convincing manner immediately. And if they can't, they'll get in trouble with Trump, because Trump will feel that the Fed is playing politics. It is punishing the US government for something that hasn't happened yet that might happen in 2026, and is being reticent about rate cuts in 2025. So we will see seeds of conflict around that.
What is the best case scenario and worst case scenario of a Trump administration, Taimur, in terms of his policies, which will impact the globe, America, of course, India?
So the best case scenario would be Trump has nothing else to prove. He's gotten elected for a second time. He's the comeback kid. And therefore, he doesn't need to rely on vitriolic rhetoric and daily tweet storm to shock the global system on a repeated basis. He also doesn't need to go out on a big war with China on tariffs, on technology. He can be the peacemaker and he can be the elderly statesman, something like that. How likely is that? I would assign a 20% chance to that. 80% chance, in my view, would be on the not so great scenario, which is Trump is exactly the person he has been for the last 40 years. All the way back in the 1980s, Trump was taking full-page ads in U.S. newspapers criticizing Ronald Reagan for being soft on Japan. And today he is talking about the same things in the context of China. So we would expect Trump, in my view, in that 80% scenario, to remain exactly the same person that he has been for the last 4 decades. Japan has been replaced by China. There will be tariff, and there will be tariff across the board for all countries in the world. It would hurt our exporters, but we have lived with Trump, even in the bad case scenario, for 4 years. I'm sure we can survive these 4 years too.
Okay, that's an optimistic view. Taimur, as we wrap up the view on India, you talked about some concerns on the urban-rural divide. What is the economic outlook looking like for you and the rate cut cycle from the RBI's perspective?
Right. So we have been on the camp that, RBI doesn't have the room to cut rates in 2024. So whatever rate cut that they do, it'll be taking cues from the Fed with a substantial lag. And then in the first half of 2025, if indeed we see growth heading toward this bottom part of the 6 to 7% spectrum, so like a low sixes growth, the RBI would then start thinking more about growth and less worry about inflation and perhaps go ahead and cut. We have the same old issues with inflation, the vegetable prices and the fruit and perishable prices. Those things are really complicating the food picture, but that's not necessarily, in my view, a demand-driven issue. It's a supply-driven issue. So if it's supply-side inflation coupled with some sort of a weakness in growth, I think there will be some room for the RBI to set the ground for some rate cuts. But in terms of growth outlook, independent of what the RBI does, we do see on a calendar year basis for 2025 about 6.5% growth, which is, I think, great by global standards, may not be great by India's aspirations, but 6.5 is fine.
It's a reduced number, your 6.5% growth? Has the India growth forecast come down, Taimur?
No, so we have been in that 6.5 to 6.75 range. I wouldn't necessarily call this a downward revision. It is basically recognizing some of the risks around the domestic demand side. That's about it.
Okay. Thank you so much, Taimur, for speaking with us. Taimur Baig there with very comprehensive responses to all things Trump, China, Fed, and of course, India. What a time to track the global economy.